Hello, I'm Erlichman, the CEO of Kape Technologies. I'm very happy to present you today a very strong set of results for the first half of the year. We continue to develop our investment case. Kape Technologies is working in a very high growth, privacy-first digital security space. We have a very strong customer proposition driven by our proven and advanced user acquisition technologies. Across all of our product portfolio, we have category-leading products with very strong and proven track record of revenue and EBITDA growth. It's all leads to a very unique and advanced operational model. We work on a SaaS base that gives us a very good quality of earnings and very strong visibility of revenues in the future. Looking on our group in a high level, we now serve 1.2 million paying customers worldwide. 44% of our workforce are R&D engineers. We were able to grow our EBITDA 9.7 times since we started the implementation of the new strategy, $600,000 in the first half of 2016 to the $5.8 million we present to you today. In the first half of the year, we had a very strong performance. We overachieved on every initiatives we communicated to the market, and we are now presenting to you an excellent set of results. If it's the improvement of the retention rate that now is crossed the 80% benchmark to 82%, up from 74% last year, the strong growth of our subscription user base to over 1 million paying subscribers in the first half of the year, uplift of 24%, the successful integration of ZenMate and Intego, the launch of new products, the ZenMate Ultimate app, the ZenMate Pools, the web firewall extension that helps us to add significant value to our user base, as well as the expansion of our cybersecurity research team that help us to expose high-profile macOS malware threats in the first half of the year.
Hi, I'm Moran Laufer, Kape Technologies CFO. Our operational achievements are coupled with strong financial performance, as revenue increased by 24.2% to 29.9 million. Our segment results, which is gross profit less user acquisition cost, increased by 28.2% to 14.7 million. Adjusted EBITDA increased by 21.3% to 5.8 million in the period. Increase of 15% in adjusted EPS to 2.5 cents per share. Our visibility of revenues have improved dramatically. We now expect to deliver 38 million in future revenues from our existing users only from the first renewal. And our balance sheet remains strong with net cash at the end of the period of 36.4 million and no debt.
The consumer digital privacy market is a relatively young and fast-growing market. If until 2 years ago, we had to explain why digital privacy is important, now it's the most common big theme in the market. People, as well as regulators, want to set up the rules of how organizations can use digital information. It helps us at Kape to position ourselves as a global leader. We offer products that help people to gain back the control on the information they share online. The market is growing very fast. In 2018, we transitioned from the early adoption stage to the mass market. Still, the adoption rates are around 25% in the US, which gives us a very large room for future growth. We see the amount of searches on Google for digital privacy and VPN growing significantly, which is another signal of the growth of the market. Overall, we experienced 18% growth in the market year over year, but we as Kape grown much faster than that, and we will take you later in the deck to the main reasons why we are able to continuously grow faster than the market. The way we structured Kape, we look on our product portfolio in 3 pillars. One is the digital privacy, where we operate our brands of CyberGhost and ZenMate that help people to encrypt all the data that flows in and out their devices. The malware protection, which is based off the acquisition of Intego that we completed last year, as well as on our own research and development initiatives. And lastly, for devices, computers that already infected, we have solutions to help people to recover the performance of their operating system through our product of Reimage, Restore, and the driver fix. The beauty is that there are great links between those three, and the opportunities in the future to maximize the gross promotion, to keep continued and expand our product offering is almost unlimited. We like to say that in Kape, we have a strong underlying asset of user acquisition technologies and know-how. We put a lot of effort on the UX and UI. The reason for that is that we would like to excel the user journey and the way our customers experience and use our software. The more touch points, the better. You can see on the slide that in all of our products, the design is very attractive and enable people to maximize the use of the software. All of those leads to a very strong growth in our subscription base. Every period, we were able to grow significantly the amount of people that buying subscription to our software. And the mix of short-term, less than a year subscription compared to the longer subscription is very healthy. Today, 91% of our subscribers are buying subscription for 1 year and longer, which gives us a very strong visibility of our revenue going forward.
Looking at our financial performance in the period, revenue has increased by 24.2% to 29.9 million. This was driven mainly by the increase in volume and efficiency of our marketing campaigns, which got us to segment result increase of 28.2% to 14.7 million, with an improvement in segment results margin to 49.1%, an improvement of 1.5 percentage point from the comparable period. Following an increase in R&D investment and indirect marketing expenses, operating expenses have increased to 8.9 million in the period, and that gets us to adjusted EBITDA of 5.8 million, an increase of 21.3% from the comparable period. A slight decrease in EBITDA margin to 19.2% is mainly due to our policy to capitalize a smaller portion of R&D expenses than the comparable period. We also improved our geographical reach in the period, that mainly due to release of localized versions of our products in various languages, including Japanese and Dutch. Moving on to our cash flow, adjusted operating cash flow attributed to current period increased to 7.3 million, an increase of 900,000 from H1 18, and a cash conversion of 127% from adjusted EBITDA, mainly due to the fact that we collect our contract revenues in advance. 7.1 million out of it was reinvested in customer acquisition cost that is attributed to revenues of future period. Total adjusted operating cash flow in the period was 200,000. Capital expenses of 1.4 million includes mainly R&D capitalization, and financing activities cash outflow of 1.4 million includes a final payment of 900,000 for the repurchase of employee shares. We achieved a strong transition to subscriptions in the period. 72% of our revenues are now coming from subscription compared to 22% in H1 18. And in the next few slides, I'll talk about our business model and exactly what that means to us. The next slide shows our strong unit economics of our market-leading customer acquisition model. We know that on every dollar we spend on marketing campaign, we get 84 cents back at the same period. By the end of the second year, we get 1.5 times of our marketing investment. After 3 years, close to 2 times our marketing investment. And after 6 years, in total, 3.1 times our marketing investment. When we look at the aggregation of the unit economics in the next slide, we can see the progress of our subscription-based broke down by cohorts. A cohorts is the aggregation of users that bought in the same initial year. So for example, the black color in the graph represent users that initially purchased one of our products in 2014. The purple color represent users that initially bought in 2015, and so on. We can see that the first half of 2017, there is a consistent growth in the subscription, mainly due to the retention of previous cohorts and addition of new users through organic traffic sources. From the second half of 2017, we started our user acquisition campaigns, and we see that from that time forward, there was an acceleration in the growth of our subscription base. The retention rate of all the cohorts improve as the cohorts mature. For example, retention rate of cohorts from 2014 gets to a level of above 90%, but also the addition of new users is growing through our implementation of user acquisition campaigns, and we see that the growth in our subscription base is now exponential and accelerated over time. If we look at the last column representing June 2019, our subscriber base at the end of the period comprised of 6 cohorts, starting from 2014. That means that we have a robust historical data set that increases our ability to predict future cash flows and better plan our user acquisition campaigns and ROI. If we look at the next slide, we see our expected cash inflows from our existing cohorts alone. That means that without any further investment in user acquisition or any other investment, we expect the existing cohorts to generate until the end of 2022, 45 million of cash inflows. And that doesn't stop there, of course. The existing cohorts will keep generating cash flow in the next year after that, the same way that the cohorts from 2014 and 2015 generated cash flow in 2019.
In slide 16, we show the main KPIs that we started to show the market a couple of years ago to help people to look on the business the same way we do as the management. Again, a very strong progress in the first half of the year. The deferred income balance went up to $10.9 million. Adjusted operating cash flow went up to $7.3 million. Retention rate improved to 82%, which this is part of the reason that you see in the bottom part of the slide, a strong growth of 24% of our overall subscription base, up from 830,000 at the beginning of the year to more than 1 million in June 2019. If I'll highlight the good progress of the digital privacy product, if you remember when we bought CyberGhost, they had 150,000 subscribers. We now have close to 500,000 subscribers with very good retention rates for our digital privacy apps. ZenMate and Intego, the 2 acquisitions we made in 2018, are both fully integrated into the Kape group. With ZenMate, we realized $1.7 million in operational costs, as well as launch new products and enhance the marketing activity of ZenMate. With Intego, we expanded the cybersecurity research team in our office in Bucharest, in Romania. Very strong performance of Intego and very healthy uplift in the marketing activity for Intego. Overall, we integrate very well businesses that we buy, and more importantly, we enhance the growth significantly, like we've done with CyberGhost that we acquired in 2017 when the business made only $6 million of annual revenues, and significant growth since then that we experienced, and this is part of the reason for the strong results that we are showing today. Our strategy is a combination of 3 pillars. One is the acceleration of SaaS revenues that's already happening and happening even better than what we expected. The strong growth in our user base that's driven by advanced user acquisition technologies and know-how, as well as investment into R&D and M&A. We expect to launch new products in the next year. We are very well placed to develop new products and improve further our existing product in order to maintain our category leading position, as well as execute on acquisition once we find the right product, the right target that will add value to our overall proposition. As a summary, we are now closing the 3rd year since we started to execute on the new strategy, and I'm very pleased with the performance of the group. Once the market that we are working in is growing very fast and the opportunities are unlimited, our ability to leverage on top of our strong user acquisition capabilities helped us a lot to take the business up in the value chain, to build up a proven track record of revenues of EBITDA growth that now is 9.7 times higher compared to where we started, as well as a very healthy operation model that help us to predict the performance of the business going forward. Our quality of earnings is in a very good level. The fact that we sell our business on a subscription base gives us a very good visibility of revenues going forward. And we are just at the beginning of the growth cycle. And we are very confident on the future performance of the business and that we will be able to maintain and even enhance further the growth in our revenues and financial metrics.